Welcome everyone to the Tim and John Show, episode 43. I'm Tim Picciott with the Liberty Advisor. We've got John Snice and the Economic Truth, and on the ones and twos, we've got Arthur Diamond Hands or Dolly or whatever he's going by these days, helping us out. We're both rocking our week attempts at the beard. I guess maybe all three of us right now trying to rock that summer beard. But basically, we haven't been doing Tim and John shows because the Tim side of the equation was basically taking a break this summer. And, I don't really like getting into all like the day-to-day daily news BS that's going on because, there's like bigger issues that are out there. And like, we sort of already know where things are going and like where it's eventually going to be. And so, until there's like material changes, I didn't want to just be out there, into the news every day. But, we're going to get into, is the market going to crash, what to look for? I mean, I feel like every single time I go on like any sort of mainstream financial site, it's constantly talking about like, oh, is the market going to pull back 5% or 10% or 50% or 20%? It doesn't matter if it's on like Yahoo Finance or Market Watch or CNBC or any of these other places. Like, they're constantly putting that out there. So why are they doing that? Also going to get into the two anniversaries that no one is talking about. So, obviously, people are talking about 9/11, the big 20-year anniversary that just passed a few days ago. Also going to get into a little bit about the debt ceiling debate, what the Federal Reserve's up to, some hypocrisies of the day relating to the pandemic. But I think first, I just want to kind of give like a higher overview of the stock market, and is it going to crash? And actually, like, when I take a look at the stock market, the main thing I'm looking for isn't even the stock market. It's really taking a look at the bond market. So right now we're over at tradingeconomics.com. I've got it on the 5-year right now. And so you're taking a look, where things are right now at the 10-year treasury. We're at 1.3. And basically, I think, anything, below 1.5, we're sort of like in that green zone. We're in the safe zone. We're on the risk on zone, in my opinion. And then once you start getting, 1.5 to 1.75, you're probably getting to be more of like the yellow zone. And then, 1.75 to 2, you're probably more like in that pink zone. And then above 2, you're really into that red zone. Now, which is, danger, obviously, risk off. But, a couple of years ago, the red zone was more like 3%. And who knows, like 2 years from now, the red zone might be 1%, and it might be 0.5%, and it might be 0.2%, and it might be, just anything. And basically, when you're taking a look at where like like what the inflation is right now, like even the admitted number, I'm not sure like the exact number, it's like let's say it's 5.3. And if
I think it was 5.4.
Yeah, so
the
I was
admitted one, anyways.
Yeah, so I mean, if you got a 10-year treasury at 1.3 and inflation's over 5, I mean, you're basically losing 4% a year holding on to a government bond, like even with their own bullshit numbers, their rosy numbers. But what happened back in October 2018? That's when Jerome Powell said we're on autopilot and that we're going to raise rates by a quarter of a point every quarter. And obviously I knew that was bullshit. I had a client video that came out the day before I even said that, saying there's no way that they could, raise rates and keep selling $50 billion a month bonds a month. So what they do, they went and they, once the market started crashing right around 20%. And so, it was the bond market that led the market to go down about 20%. And then what happened? You had the Federal Reserve stopped selling $50 billion a month. The plunge protection team, aka the Presidential Working Group on Markets or something like that, which was aka the plunge protection team, came out on the 26th of January. Mnuchin, they all came out. The whole cavalry was there, and they basically started rigging things to have the market go back up. Then take a look at March of 2020, you had the Fed coming in, buying up trillions of dollars of corporate bonds and reneging and negging on every single thing that they said they're going to do in the past. And all of a sudden, then the market goes back up because they print trillions of dollars. So like anyone that's looking for like any headline to have the market go down, like I don't know what headline you're looking for. I mean, if you would have told somebody 3 years ago, oh yeah, we're going to have like a global pandemic and it's going to last at least 2 years and you're going to have millions of people unemployed, and then Trump's going to lose, and then they're going to contest the election, and then a bunch of QAnon people are going to storm the Capitol, and then it's going to have a whole big melee, and then and then just think of like every single thing that's gone on. You would probably think that would be like terrible news for the market, but yet the market kept going higher and higher and higher, because the only thing that matters is the Fed printing money? Are they going to keep printing money? I mean, that is the entire thing you need to watch out for. It doesn't matter like, oh, what this puppet said or that puppet said. The only puppet that matters is Jerome Powell. Are they going to keep printing money? And then, okay, let's play it out. The market does go down 20%. What are they going to do? John, what do you think they're going to do? They're probably going to, too bad we don't have our money guns right here. They're probably going to print more fucking money. That's what they're going to do. Like,
Oh
you don't
yeah,
have to be,
it's pretty obvious what they're gonna do. They're gonna print more, well, actually more central bank reserves. It's not, well, they actually did print base money as well because it went into the market. Like they basically bailed everybody out through different programs that they had, of course, the Main Street lending program and others that they had in the United States, and then the direct, deposit of was it 700, 13, 1400, and so on into people's accounts. So of course that money is direct money printing because it goes directly into the economy. It would be spent into the economy, creates direct inflation for people. Meanwhile, you have on the other side, you get the asset price inflation with everybody is putting money, getting bailed out, the big banks and everybody. As we saw, there was a massive, I have my, just 1 second, I'm going to pull up my little chart that I got going here, which is, the central banks, the Federal Reserve's balance sheet. And if I don't know if you want me to show it at all, Tim, or.
we want to see it. Let's
see it.
Let's whip it out. Let's see it.
Yeah. I'm going to whip it out. Yeah, so here we can see, the whole taper that happened, right? Like it started back in when was it? It started around 2017, right, Tim? Isn't that correct? And then I think, yeah, basically kind of peaked out there, 4.45, 4.5-ish. And then they tapered it down to about 3.76. And then, of course, as you see, that's the 16th of September.
That wasn't really like a classic taper. They were actually like selling bonds. And now, like when they talk about taper, they're just just to make a distinction for the listeners. Like now, when they're talking about tapering, they're talking about right now they're printing $120 billion a month, and they're talking about having it not printing as much. Whereas in before, they were actually selling at first like 10 billion, then 20 billion, then 30 billion, then 40 billion, then 50 billion.
Well, yeah, you could,
billion, and then it ended.
And you could clearly see here, if you look at the chart, like look at the difference here. Like this, that was over here is the intervention, from 2008. It looks like nothing compared to, like, look at now, like how it actually went sideways for a while. It barely moved.
And what happened when it went sideways? What happened when it went sideways? And I've, something I touched on in my Anarchapulco presentation in 2020 is that every other central bank basically then started printing, picking up all the slack. So it's like basically it was like a hot potato that was going around.
Yeah.
And once it was the when it wasn't the Fed's turn anymore, then it was the Bank of Japan, then it was the European Central Bank, which was basically not even within like their mandate to even do such a thing. But they're always pulling rabbits out of their hats every single time. And another article that you had showed me was Fed's Kaplan and Rosengren to sell all stocks amid ethics concerns. I mean, they're going to sell like their individual names, but they're not going to be selling they're not going to be selling their the main, they're not like just doing all the cash. But like think about, like, a lot of these guys are worth tens of millions of dollars. And so like Jerome Powell is worth tens of millions of dollars. So you got all these Fed shares worth tens of millions of dollars. Like, you think they're just gonna go like shoot themselves in the foot and stop printing money and cause like their own net worth to plummet? Like, no, they're not. I mean, maybe now they will, now they're selling it all, and maybe they'll wait to go, buy the dip or something. But
maybe he'll buy some gold and then he'll sell it.
Yeah, and the thing is, like, even if, because I was saying, okay, the Fed's going to print more money. Like, even if we're wrong, okay, we're wrong. The entire system implodes in and on itself. They're waiting there with a central bank digital currency, and then all of us, people that were paying attention to John and I and buying precious metals and buying, and more importantly, cryptocurrencies and Bitcoin. In my opinion, that would probably make those go stratospheric through the roof. And so, there's many different ways to sort of play this and try to be safe. But, ultimately, there's only so many things that the Fed can do, so many tools in their toolbox, so much ammo that they have, which is maybe now goes to the Twitter image that John showed, where let me get back to this, where there was a something that John showed me where this is the new head of the Afghani central bank. For those of you who are listening to us, we've got a picture of basically some Taliban guy with an
Hey, at least he looks like what a central banker really is, Tim. Come on,
a terrorist.
He looks like a real central bankster. Yeah,
well, I was
a financial terrorist. There you go. You have one there, right there. That's an example of what they actually are.
Now, maybe you guys don't know this. Maybe
You're
I
like,
don't know. Maybe
listen,
yeah. So I mean, I was always calling him Bernanke, Osama Ben Bernanke. So so I don't know
oh,
if you guys.
is that Ben Bernanke? Did he actually like just
He's growing a
did he
beard too,
sneak
man.
over there?
I mean, he's
Is he
growing
in
a beard too.
disguise?
But anyways, I mean, the big problem they have
Yeah.
right now, like, so the State Department came out. I don't know if you guys heard this, and this is like actually real. And I saw somebody post a tweet, and I went back to go find it and see if it was actually like it wasn't like the Babylon Bee, and that was actually real. But the State Department, their main concern right now with the Taliban government is that it's an all male Taliban government. So it's like it's like
What do you expect? They have like Sharia law, you idiots.
it's like
Sorry
it's like
to
wait
say
a
that,
minute,
but
the terrorists are all men. Like we need to at
yeah,
least have some women in the terrorist
yeah, we
government.
need someone.
That's like their fucking problem. So I mean,
And you know what's even more hilarious is that it's Libya all over again because guess what? Where the gold that the Afghanis have is at the New York Fed in the basement, just like the Libyan gold. Where's that now? Is it still there? Is it actually in the Libyans' hands?
I
Maybe
mean, I
not.
just thought that was like just
Yeah.
way too rich to not cover.
No,
Uh,
that's pretty hilarious.
another thing in terms of like way too rich is this was who was I mean let me I should have like figured out who said this, but one of like the commerce secretary, yeah, the U.S. Commerce Secretary Gina Raimondo told Yahoo Finance Live in an interview, higher taxes are necessary to invest and compete globally. U.S. Commerce Secretary. So I guess I should just read the headline. And I think they actually changed this headline because originally it wasn't to invest and compete. Originally it was higher taxes are necessary to compete globally. And so yeah, everybody knows that higher business taxes is like the one missing ingredient here that
That
America
makes a
needs.
real good economy. The higher the taxes. Like look at Norway, how well we're doing. The reason why we're doing well is because we're pumping oil out of the ground. We have a natural resource that we've been suckling on forever and creating a social, like semi-socialist. Like they kind of like their socialist regime is fell a little bit apart in Norway, and then we got in like conservatives. But now we actually had our election was yesterday, and the Labor Party took over again. So more, my mom was pretty happy because like, yeah, they're gonna tax the rich, she said, and I was like, yeah, you remember that that's the same party that you are now in the 51% tax bracket, mom. Like you pay 51% tax as a cleaning lady. You aware of that? So
Yeah.
that kind of like caught her a little bit off guard. that because
Yeah,
she's always complaining about taxes. So
tax the rich, also known as fund government atrocities.
yeah. Oh,
There's
100%.
been a lot of really good memes going around with the
Oh, we had the
AOC.
AOC,
Yeah, I'll find them.
at the Met Gala the other day. Was it yesterday or, tax the rich?
Yeah,
Yep.
that was just the other day, and I like the memes. It was like Epstein didn't kill himself, and they had a lot
Oh,
taxation theft
a
was
lot of
another great
fun.
one I saw. But yeah, they had a bunch of like really good ones.
Yeah, don't
Uh,
wear white clothing. That's a warning to all of you scumbags out there. It's gonna
yeah, and
come back at you.
we've also got on deck. Yellen warns U.S. on track to default in October. I mean, does anyone honestly think they're going to default? I mean, obviously, every single time. I mean, I don't even know why they even have a debt ceiling. And then, I mean, what the Republicans do when they were in office? They made it. I think they technically suspended it. Where once we got
Yeah.
to this point, like wherever we're at, was the new ceiling, which was such a cowardly move. I mean, you might as well just like end it. I mean, it's just
Well,
like
is
they have
it the
this whole
debt
big
ceiling on
song
the
and
Tower of
dance.
Babel? On the Tower of Babel or something? Like they continue to build it, but it becomes more and more unsustainable. You can only build a building so high before it collapses, guys. To make an analogy here.
Well, I think the Tower of Babel
Yeah.
analogy is because they were speaking different languages. I think was the biblical story with that one. But yeah, I get the point. But I mean, it's
Yeah.
all a foundation of the foundational root of money right now. Not really money, but of the currency that we have right
Yeah.
now is debt. And so you're building an infrastructure foundation on top of like quicksand, basically, that you can never get out of. And most people don't even know. And I'm doing this off like the top of my head right now, but when like they basically have already like ran out of money, but like what they do when they're running out of money is like the first thing they do is they take, I believe it's called the G fund, which is like the money market fund that I think
The
BlackRock
treasurer
owns.
general account, TGA? Is that what they
This is
pulled
for,
out
it's for
of?
like the
Oh,
retire, it's for the, like the pension account of the government pension. They basically take the G fund of the treasury fund uh of the pensioners. Like if somebody's like in the military or somebody works for the government and they have money like in there to be safe and to keep it in the money market, well, the government just fucking steals that like every year or two and to
is
finance
that the
them.
senators' money too? Oh no, wait, they probably have their own funds.
They probably have a different pen. Who knows? But
Yeah.
that's probably more like a pension
Yeah.
guaranteed payout. Where this is like if you have, it's sort of like their version of a 401k. I think it's either like 403b or 457. I mean, I'm not. I mean, it probably could be either depending on what they're doing. But anyways, it's the people that want to be safe and put their money in money markets. They basically then like rob that first, and there's like a whole like series of things that they do, and they, then they borrow money from over here and rob Peter to pay Paul, and then like this debt default in October, which basically 0% chance of probably happening, is at the point when they're at the absolute limit of and I did a like several years ago I did a blog post on that. I'm just trying, like, probably did it like 5 years ago, so I'm just trying to say that off memory right now. But yeah, I would say.
Yeah.
But I mean, is this like how you should be managing things as a world reserve currency? You're just gonna go,
Well,
oh yeah,
let's compare it, Tim, because you're on that topic of government spending. Well, let's see how they're doing compared to other nations. The America, and yeah, we look at here. Venezuela's on top. Government deficit of minus 29.9. It's pretty high. And then you have the Maldives under there, minus 27.5. The Seychelles at 19.10. Actually, they're the most vaccinated in the world. Cuba minus 17.70. Iraq minus 17.50. Lebanon minus 16.50. And here's the nation that should be up there. What is going on? Canada is laying at minus 15.9 budget deficit this year. Oh, and it's right below us. It's the America, and it's negative 14.9%. And that's the world reserve currency, guys. You
Yeah,
got
well,
to
it's
wake
not
up
gonna
here.
be. I mean, it's not gonna be the world reserve currency forever, and that's
No.
sort of the world that we're planning on. I mean,
Yeah.
I would be. They're going to try to do some sort of problem reaction solution to get the central bank digital currency. And that's like one of the main reasons why I'm not doing videos, because like I wasn't doing them, because like I already know what the end game is. Like the end game is, and actually as I think Arthur Diamond Hands is coming out with a video. It might already be up, I'm not sure. On I was doing a walk and talk with the end game, and that gets into more like tinfoil hat stuff and talk about transhumanism and lots of stuff that I'm sure isn't appropriate for Daytube over here. But anyway, so you guys should go and check that out. But the end game is ultimately getting everyone to track, trace, and surveil all their currency. Even like the former head of or the current head of the Bank of International Settlements, Augustus Carstens, that guy's always talking about. Well, when he's not talking about food, probably because the guy's like 400 fucking pounds. But when he's not talking about food, he's talking
We
about how
want
they can
global
block.
control.
We need to block financial transactions. We've got the technology now to control people, and we want to know, this $100 bill or this $1,000 peso, who it's going to, and now we've got the means through technology to do that. And so they want to have you all, sucking from the government teat, getting universal basic income, and and they're basically going to create like a two-tiered America where you're either getting like super rich from being in the equity markets, owning real assets, and seeing those hyperinflate or disinflate a lot as we print more and more money, or you're part of the lower class is getting paid off and getting paid hundreds of dollars a month for each child that you have, and getting all this stimulus, which will probably be increased, and then eventually once they get everybody on the dole, they'll start social engineering people and saying, oh hey, well guess what, you didn't get the vaccine or you didn't get this or that, so we're not going to give you any money. So what are we looking at now, John?
Well, also just one thing before I mention this, they just increased the food stamps by 25%, didn't they? As well.
Yeah.
Just as another one, right? So it's like central bank digital currencies are just about full control. Basically, that's what they want. And I covered that. I did a presentation on 2018. I know you've done several talks about that too, Tim, as well. So we've been on a ball. We knew that this was coming. And actually, it's they're hiring. If you want to be a globalist scumbag, you should come over to Canada because they're hiring project architect CBDC at the Bank of Canada. And if you want to be a business design lead, you know, you can join the team of oppression.
And so right now you are on a careers, what is it? Careers.bankofcanada.ca.
Yeah, this is Bank of Canada's own website, guys. And of course, at the bottom here too, there's another. I don't think are they the same? Yeah, they're hiring several solutions architects for central bank digital currency. So it's basically they're getting closer. You know, they're getting very close here in Canada as well. Like we're in dire straits. They just had and that probably lead us into, you know, you're talking about inflation as well. It leads us into Canada, and I think I shared an article with you that Canada, I think it was yesterday or day before, where we suddenly hit 4.1% official inflation here in Canada, and it's the highest inflation in 18 years in Canada. I think they're starting to get in a lot of trouble because our real estate market is just blood red hot in the two, especially the two major cities, Vancouver and Toronto, but it's spilled over everywhere. Like right around, just 2 houses down from me, Tim. There was a house that sold $50,000 Canadian dollars over asking. And that is not very usual around there. We live in a retirement community. It's very just slow and steady, you know. Prices barely go up, but I think prices are up like 15-20% just in our neighborhood here as well. So it's pretty mind-blowing to see that. And of course, they had another subdevelopment down here that had one house on it until we hit COVID, and then suddenly exploded. Like 16 lots just bought up like that. And you've seen that, of course. People, I think a lot of people want to get out of the cities too because of the moronic, you know, measures that we have with COVID here. So it's a two-sided thing where people want that, and they would just want to, you know, since they are not having to go back to work, a lot of them, they're gonna just, you know, stay on in their house on the countryside and live at a pretty nice place right by the lake where there's lots of beaches and golf courses and stuff to do here. So I don't like I get why they want to move, but then secondly also it's a big problem that they here in Canada as well. You had the central bank chief, like during the midst of the crisis, Tim, he came out, and I think we covered it back when it's Tiff McClem is his name. He used to be like deputy central bank officer or whatever you called him. And he actually went out and said during the midst of the crisis, it's like, go out and borrow, buy that new car, get that new house. You know, like we're going to keep interest rates low until 2023. And then, of course, now they're talking about maybe raising it earlier. Nobody really knows. Yeah, all that debt, you know, that we accumulated. And I think I actually let me see if I can pull that up because I just posted it on our Discord group that everybody should join. It's a lot of fun there. Yeah, on our Discord group. Let me show you guys a picture here. Because this is interesting as well, talking about debt increase, Tim. And especially like Canada is severely hurt. Like look at this. This is all the, you know, big countries in the world, like G20 plus countries. And as we could see here, we have, you know, an insanity of percentage. Like we're up 80%, Tim, 80% in debt. When you look at the big scheme, actually the government debt, like unofficially, has risen by 100% in 1 year. So all the debt, you know, for 150 something years has just, you know, been doubled in 1 year. In 1 year of spending. And then non-financial corporations just utterly amount, and then households. Look at this. Like the only one that's comparable is New Zealand on households, but nobody can compare to us on government spending to GDP ratio. And all debt, you know, like we're up 80% all debt. Like we almost double our debt in 1 year. Like who does that?
Who do they think they are? Like Donald Trump doing that? But then we also have the Reuters article that you had shown us where basically it says that Canada inflation hits 18-year high with election just days away. And so while you were talking, I was looking this up. I'm not sure if you guys have seen this, and it's funny that the website is actually nottheb.com. So like not the Babylon Bee. Like this is actual real life. And the Biden administration's at Brian D's NEC on skyrocketing grocery prices. I'll just let you guys listen to this because it's just like so pants on fire craziness. Hopefully you guys can hear this.
Text here is the focus, the appropriate focus on the question of grocery prices and the increase in grocery prices that we have seen. The context here is the focus, the appropriate focus on the question of grocery prices and the increase in grocery prices that we have seen recently over the last couple of months. And if we unpack that, one of the interesting findings of the report that we put out today is that about half of the overall increase in grocery prices can be attributed to a significant increase in prices in three products, in beef, in pork, and in poultry. And in beef and in pork, we've seen double-digit increases in prices over the last couple of months. In fact, if you look at the category that is grocery prices, what economists call food at home, so food that is being purchased to eat at home, in a number of areas we've seen, if you take out those three categories, we've actually seen price increases that are more in line with historical norms. And we've seen some categories, for example, fresh fruits and vegetables prices have actually declined since the end of last year. And if you look at a category like eggs,
go to the store.
Obviously a similar supply chain, similar input and feed costs to poultry, the price of eggs has actually come down over the last couple of months. The real drivers in these three areas, these three proteins. If you look at that market, the thing that is striking is across beef, poultry, and pork, significant consolidation in those industries. So anywhere from 55 to 85% of the market.
Yeah. So if we don't count, like, we just don't count most of the shit that people buy at the grocery store, the prices actually haven't gone up that much at all. And like,
Yeah, exactly, Tim. Come on.
Yeah, and complete bullshit to say, oh, the price of fruits and vegetables have actually been going down. Absolute bullshit. I mean,
But you know what happened, Tim? This. Oh no!
Right now, if you're eating organic, it's not going down at all. I mean, I think like a little pack of raspberries is like $4 or for organic, or like a little pack of like organic strawberries is probably about like $6 over by me now. It's just now you can get like all like the GMO stuff that's doused like with crazy amounts of glyphosate and Monsanto bullshit, which I guess now is owned by Bayer.
Hey, you got shrinkflation.
Yeah, shrinkflation. Yeah, they got the shrinkflation. I mean, yeah, they're gonna start having like you're gonna start getting like an ounce of meat, and it's gonna cost as much as like a pound used to. Oh, don't worry. I mean, there's so many ways they rig this number, but I mean to have
bugs.
And then you've also had like the Biden administration regime come out. One of their economists came out and says, or Biden's like, according to my economists, they think that there's no correlation between. There's actually like a video on this. Maybe we can find it, while you're talking. But it says something like, oh, according to my economists, there's actually no, correlation between people getting paid more to not work and stay at home and the labor shortages. Like my economists don't see any correlation with that. And so, I mean, it's just like we're like in complete crazy land when it comes to like all these terrorists over here who are just trying to like dictate how things are. But yeah, I wasn't sure if you guys had seen that clip where like one of their
I seen it.
chief economists.
It's pretty. It's just stunning. Like how these morons get to say stuff like that and actually get away with it because, actually being the Fed, I run out of ammo. It's not working anymore, Tim. The fiscal policies. I can't print more money. I can't do more deficit spending. What do I do?
Well, back in 2006, like even Obama thought that raising the debt ceiling was a bad thing. And when he was a junior senator, he said that, the fact that we are here today to debate raising America's debt limit is a sign of leadership failure. It's a sign that the U.S. government can't pay its own bills. It's a sign that we now depend on ongoing financial assistance from foreign countries to finance our government's reckless fiscal policies. Over the past 5 years, and again, it's like 2 years before I got in office, I guess technically 3 years, our federal debt has increased by 3.5 trillion to 8.6. Oh, wouldn't that be nice? That is trillion with a T. Again, this is Obama talking. That is money that we have borrowed from the Social Security Trust Fund, borrowed from China, and Japan borrow from the American taxpayers, and over the next 5 years between now and 2011, the president's budget will increase the debt by almost another 3.5 trillion. I mean, that seems like chump change now. I mean, now they're talking about like 3.5 trillion dollars that they don't have like in one fell swoop, and all these different like programs that they're trying to run. And so, it's really easy to talk tough when you're not there. And I think that you had a clip as well that we can try to show. Let me try to find this, but you had a clip where one of the Democratic senators said something along the lines of like, "Oh, it doesn't matter." Actually, I haven't even listened to it, so I don't want to speculate at what he's saying. But let's go take a look at this clip over here.
We are not broke as a nation. We are not bankrupt. We can't go bankrupt. We absolutely cannot go bankrupt because we have the power to create as much money as we need to spend to serve the American people.
Until we're not the world reserve currency anymore, and then all that math doesn't matter. And thank God that we have Bitcoin that was in, which actually the anniversary of that almost came up. And I guess before we forget, I mean this basically today's the 16th. Yesterday the 15th was the anniversary of Lehman Brothers going down. My first day on the job. Welcome to the business. So I just hit my 13-year anniversary, which I think the odds of you making it 13 years in the financial services is probably, and then moving cross country and everything, was probably about like 1%. So here I am, beating the odds.
Somebody said, "Welcome to the fucking show."
Yeah, welcome to the fucking show. Here's a phone book, and you're 22 years old, and start calling people to give you their life savings the day the market crashes, and everyone's scared shitless, and like basically had no direction.
I can only imagine.
Yeah, welcome to the business. Lehman Brothers down.
Yeah.
I mean, back then I think the market was down. I think intraday was like over like 700 or 800. I think it finished. It was like 666 that it was down. And it's funny because I think the S&P eventually got to like 666 or something. Like, of course, like they always like throw this stuff like in our faces. And then the other anniversary is I think this is tomorrow will be the anniversary of this one, is the repo market craziness. And I would just suggest people just go back to the episodes that we did 2 years ago when we were in the thick of things. But that was another rabbit they pulled out of their hats back then, when all of a sudden they started, there was some banks that essentially were running out of money, and they and other banks wouldn't lend money to them, and eventually like other banks started lending money to them for like 10 or 11% when they could have went to the Fed at 1.25, and then the Fed came out and started basically letting everybody go there, and started having like 100 billion, eventually got up to like $1 trillion repos, and there was like back-to-back $1 trillion repos that were like out for a month. And I mean, I've already forgot about a lot of this stuff, but anyways,
here we go.
Yep. So can you explain what's going on for the people that are listening to this right now and can't view what's going on?
Yeah. So what I'm showing right now is basically on September 17th, 2019, the Fed had to come in with an intervention in the repo market that was $53.15 billion in purchases overnight from the banks. But what actually happened? So they continue these purchases to prop up the bank. It actually hit its height on the 17th of March in 2020. That's an interesting date, isn't it? Because at the peak of the market crash, basically, that we had, and of course, it brought it down. It peaked up again, back in May of.
Well, there's
of
also
this year
a reason that happened in March, is because at that point they said they didn't need to keep any fucking reserves anymore. So there really wasn't a need to have to do a repo. It was only if they wanted to do a repo. So like traditionally, like the high level version of this, like some banks will have 9% in reserves, some banks will have like 11% of reserves at the end of the day, and they needed to have 10. And so the bank that has 9 will then go borrow from the bank that has 11. And it got to the point where things were freezing up 2 years ago. And then like banks
interest
didn't want
rates
to go
went to 10.
Yeah, like banks didn't want to
overnight.
go. Yeah, like banks didn't want to go to the Fed because it's sort of like a scarlet letter, like, oh wow, you're in big trouble. And then like other banks could then use that to then like market against that other bank. And so they decided that they would rather pay like 10% annualized overnight to.
So what happened? Yeah, so what happened was that the overnight went to term repos. So here you could see the term repo interventions that
What happened is
now.
they released a virus that was made in the Wuhan lab to then be the cover to then print trillions of dollars to then cover up and buy up all the bonds from the investment grade companies that were about to be rated as junk. And basically, in my opinion, this whole entire pandemic was a financial cover up in order to get everyone's eye off of what was happening in the financial markets, focus it on the, on the health
Yeah.
markets and what's going on. And in my
No, and
opinion, everything that they've done has, made things dramatically worse, but that's a whole nother topic.
Oh, of course, and you know what, George Salente, I was listening to an interview with him with Rob Kiyosaki and Kim Kiyosaki. He actually said that, this looks like it was intentionally released because you remember the protests in Hong Kong, the protests all around the world. Everybody was protesting, and if you really listen to them, it wasn't just so much about freedom or whatever. It actually was about lack of purchasing power from destruction of their livelihoods in France. Like their government is 62% of the economy. It's just, strangling the poor private sector that's left in the country, right? And that now you have that back again where a lot of countries, but right now too, there's other intervention going on, and the money markets, Tim, I don't know if you could tell people about the reverse repo market right now that is happening, where you actually see it's the reverse side of the repo, basically. So if you could just explain quickly what a reverse repo is versus a repo. And then actually what you can see here, it's actually peaking at like record highs. And I believe, who was it? I think it was UBI, a guy from UBI or something that said when it hits
UBS,
1.3
UBS, man.
UBS, sorry, yeah. And when it hits 1.3 trillion, we could be in for a lot of trouble, and it's starting to sniff at that point. It's up at like 1.3 trillion today or something. So yeah, things are starting to happening, and I think there's a lot of trouble coming down the line very, very soon here,
Yeah, so I
Tim.
mean, I
And
guess like a
yeah,
repo would be the banks give collateral uh to the Fed and then get cash, and then here would be like the opposite where they're going to be giving the Fed cash, and then they get the collateral, which then sort of like defeats the purpose of them printing 120
but
billion
they're
dollars a month.
yeah, and they're basically are sitting like the money is sitting at 0.05%. At the Fed as central bank reserves right now. That's what I've been listening to this discussion a lot. They're trying to make sense out of it. And as far as I know, like they're actually a lot of money market funds, they're parking their money at 0.05% because that is a lot better than having it elsewhere, apparently now. So that doesn't give you a lot of, trust that there's good things going on in the system, does it?
Yeah, I mean, if you take a look at where the 6 month treasury bond is only paying 0.05. So I mean, if you compare it to that, basically, it's better, it's like risk free, supposedly to
Yeah,
give the Fed,
it's like risk free.
whereas if you go where if you have to lock it up over 6 months versus overnight, it seems like a much better deal for them. And I guess, just some of the, kind of rounding this out, I did say, thank God for Bitcoin. Bitcoin will be rolling out a new update to its system next month called Taproot. It seemed like the skip to the end version of this is that basically it's going to make Bitcoin have the ability to be more private. I'll still, not necessarily hold my breath out for that one. Also supposedly going to make it so that way you can have like better, more advanced like smart contracts and the ability to do potentially like DeFi within there. And then also, I think you can fit like more transactions through, because like they're like messing around with, it gets into like really geek stuff when it gets into like the Schnorr, it's different stuff that's gonna be over everybody's head that I don't really feel like kind of get into right now. Then also we take a look at the Bitcoin hash rate, and I also do have like a bunch of other hash rates on here. So I've got like Ethereum, Litecoin, Ripple, Dogecoin, Ethereum Classic, Bitcoin Cash, Zcash, Dash, Monero, and they basically are all pretty much not even relevant. Like even all of them combined are basically a blip on the radar compared to Bitcoin. And so we did see, back in May, middle May, the Bitcoin network was almost at 200 exahash, which is like just gigantic amount of like hashes per day. And then it got all the way down to like it was about like 68 exahash. And right around like July now it's creeping back up to a pretty healthy number. It's around 155. So when China kicked off, I always feel like saying like China, when China kicked off all their miners, basically what ended up happening, which makes me think of like Joe Biden now when I think of miners, but when they kicked
Well, they
off their
kept their
miners,
gold miners though.
kept the gold. I mean, a really dumb idea by China to do that, but I'm sure people were underground and had to go ship them to other places or be more clandestine or convert what they're doing.
Well,
But
they're basically competing with the government, right? That's why they had to come after them.
yeah, and
It's
I'm
pretty
not
obvious.
necessarily and I'm not like a Bitcoin maximalist, but when it comes
No.
to like proof of work, and like what has like the most amount of store of value and work going into it and network security, like nothing comes close to Bitcoin. So although
No.
I'm not a maximalist and I like the other innovation that's going on, it's just you have to point out that there's just so much more work and power and network security in there that you could have like a fraction of the Bitcoin hashing power going over to, let's say, Bitcoin Cash, although philosophically I more agree with them, or going over to one of these other
Well,
protocols to kind of take them over. Although there are some, I think it's what is it? It's like Komodo or something, where where I think like Pirate Chain is based off of, where it's somehow built into Bitcoin, where you'd have to, in order to like attack it, you'd have to attack Bitcoin and Komodo to then. I don't own any Komodo. I'm just like saying that as like a or maybe that was like, maybe it was like Zcash. I forgot which one it is. But Zcash has its own problems in terms of like founder fees, and I mean, yeah, I'm not gonna make a whole entire
well,
Bitcoin spiel on things that people don't care about right now, but
I think what's happening now, Tim, is that we're seeing the move towards. I wrote an article back in 2014 about what's gonna, Bitcoin, I think I called the rise of the Bitcoin empire, and basically I was talking about what would be the next world reserve currency, and I looked at Bitcoin versus the SDR at the time. Actually, very interesting. I went back and I couldn't believe that I actually wrote that piece back in the day. And I was talking about, the potential for Bitcoin to become that reserve currency, which is really, it's starting to show, how it could actually become that, because we'll look at, we had El Salvador just recently made it legal tender, right? So you get the El Salvadorian economy. You're going to get a lot of investment there just because of
wasn't
that.
like
And they probably
Ukraine
know
like
that.
trying to
Yeah,
wasn't like
Ukraine,
Ukraine trying to do it
Ukraine is
too?
just working on it. Yeah, Ukraine is just working on similar things in Ukraine as well, because the hryvnia, it's another shit fiat coin out there, had massive inflation, and of course, they tried to take over that country. Both Monsanto with Victoria and Nuland and everybody, with the coup that they had, and they really want to take that away from Russia, because Russia has like half of the population is Russian. They want to be Russia, whatever. And so that's what that whole thing, they took over, the Crimea Peninsula there. That's where the port is to the Black Sea for the Russians and all that stuff.
Sounds
But
racist.
again, it comes back to that, a good asset will eat up, the other bad money. Yeah, it just attracts it to itself, because when you have something that actually have a fixed value, that you can, well, it's still inflation on it right now because you're still increasing the supply. Yeah, but you have an end fixed supply, and I think year 2100, if I'm not getting mistaken it right there, Arthur. So it basically is, the best asset that we really had, that you can have a scarce asset. It is digital, and it could stop to exist in an instant if you shut off all the Bitcoin miners. What are you going to do? But it is such a powerful and decentralized system that it's going to be like, I always made the comparison to from the beginning of it being like the BitTorrent system. BitTorrent is still around. Everybody's using it to download, illegal movies or whatever, right? And they never, managed to ever come close to
I
shutting
don't
it
watch
down.
movies. So. I'm
No,
not
but
even,
yeah, but that's what, it is. BitTorrent was massive for that, and it's still around, and it's still bigger than ever, right? That people are downloading,
huge.
illegal stuff, and and actually, BitTorrent has their own blockchain as well, if people wasn't aware of it. But yeah, no, again, like decentralized systems are very powerful, and I think especially the elites are discounting the power of decentralization, because all they can think about is centralization of things, right? And they don't want the central bank digital currency. They want a social credit score for everybody, that they could trace and track everybody. But what does humans naturally want to have? Well, we just want to be left alone, most of us. Like, just leave me the hell alone. My thing is, you really go down to and ask people. That's probably what they would like to have, in their life. They don't want, the government being on the door knocking all the time, wanting to steal some more money from them. So I think like Bitcoin and other cryptocurrencies, like during this next, I'm still like, haven't said no to my $300,000 Bitcoin, because it's totally possible still. It's got to reach, I think, like $3 or $4 trillion in market capitalization to be able to pull that off. But I think it's only needs like 2.5 trillion to actually make it to 150. So I think that's totally possible for it to move in fiat terms. But I'm trying to tell people, it's like, how about we look past that fiat price and actually, why don't we just price things in cryptocurrencies and get rid of these garbage shit coins that I would call all the cryptos, and then these stable coins, gotta laugh at them. There's nothing but stable about them because they're backed by these ever diminishing value fiat currencies. Sorry to go on a rant there, but
So if you guys enjoyed that clip, please head over to timandjohnshow.com to watch the full episode. You can also get the audio version on the website as well, in addition to your favorite podcasting app. At timandjohnshow.com, you can also sign up for our email list, which is the first place you'll gain access to our long format shows. These shows are self-hosted, so if you want them first, you have to be on the email list or frequently check our website. You won't get the videos first, but you can also find them on odyssey.tv, lbry.tv, and bitshoot.com. And if you are happy with getting the clips after everyone else, then you can keep watching us on YouTube, in which case we ask that you smash that like button, hit subscribe, hit the bell, and turn on all notifications. Thank you.